So they're going to try to supplant the US dollar, which if that starts to happen, then you have all these countries starting to dump dollars on the open market, which will also drive the value of the dollar down.
Here at Liberty in Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Gareth Soloway from InTheMoneyStocks.com. Gareth, thank you so much for joining us today.
It's always a pleasure, Elijah. Thanks for having me back.
It's great to have you. And what an amazing week for the precious metals. We're seeing gold today just below 1900. Now, this is about an eight-month high for gold right now. What do you think is driving it? Geopolitical uncertainty, inflation? What are your thoughts?
Yeah, so I think it's a little of everything, right? I think it's the inflation numbers, how they continue. We saw the PPI earlier this week come out near 10% inflation. We've seen the Ukraine, Russia issue not go away, so there's more concern there. And I think overall, there's just a matter of the consolidation on the chart that was telling us a breakout was coming. It was just waiting for that little bit of a nudge, and I think you're absolutely getting it. So yeah, I'm in the camp that we are on a breakout path here. We've already broken out of a channel. In fact, let me show the charts just real quick so everyone can kind of get up to speed. But basically, this has been the chart of gold, right? Or this is the chart. And you can clearly see that you have this kind of wedge pattern, and we just broke out above it. Now, the key is going to be when we head up to the high from 2020. That's going to be the big spot where investors will have to see, does it have the ability to punch through? If it does, then, I've talked about potentially $3,000 gold not too far in the future. I do think that that's a possibility. I also think that if you look back in the 70s, this pattern played out exactly the same. All right. So what I mean by that is you had this from 2018 to 2020, 2 years of big moves to the upside in gold. That's about an 80% gain there. Then you had 2 years of consolidation. And then over the next 2 to 4 years, in the late 70s, gold just ripped from $100 to $900 an ounce. And again, I don't think that, I would be super surprised if we go up that much percentage wise. But again, 3,000, 4,000, maybe in a couple of years, even 5,000, I do think is a possibility. No doubt about it.
So you're saying that gold right now is breaking out the triangle pattern right there. But for silver, we're seeing quite a rise. We're nearing 24, but it's not, breaking any records. I mean, gold, at about 8-month high, but silver, we were just up here a couple of weeks ago at around 24. So what does silver look like to you right now?
Yeah, so you're right on that. Silver's a little bit of a harder metal to gauge because it has the industrial side. So what investors have to understand is that even though silver tends to outperform gold over the longer term in percentages, in the short term with the Fed raising interest rates, you have to think that could slow the economy, in which case the industrial demand for silver can slow as well. So ultimately, do I think silver's still going to go and break out eventually? Yes, but we need to get through this kind of uncertainty with the environment, with the industrial side, with the economy, and figure out what the heck the Fed is going to do and how much it's going to hurt the economy before silver can take off and catch up to gold. So again, for me, I'm much more exposed to gold right now, very little exposure to silver. But again, I am eyeing silver. But you're right, it hasn't broken out yet. You can even see, you can even look at this trend line here, and it's pretty clear that you haven't taken out that downsloping wedge pattern. And you can even make a wedge right here, right? So this is your first step to get above this line here. If that happens on silver, now you're talking about something. But it hasn't done that yet versus gold, which has broken out in the near term.
And what are some price points for silver? You're saying if it does break out above that wedge pattern, then that would be bullish?
Yeah, that would definitely be the beginning of something that I would pay attention to. So it looks like it's just around $24 an ounce, where if we got above that and held above it for a day or two, then I'd start to say, okay, this is something that we want to pay attention to. But even after that, it has to, just like gold has to go back to 2,075, you would still need to see silver get to 30, and then it would have to attack that double top. for me on silver, I'm kind of in the position of saying, okay, well, we have this defined level at 22. If by chance silver broke down to, let's say, these previous pivots here, then that's where I become a big buyer, right around $19. Again, it may not do that. It may break out first, but for me, then I would be really interested because, again, the way I look at silver is that it's a metal, so inflation is going to just naturally cause the price to go up over time. You just have this short-term economic issue we have to get through. So if that causes any weakness, I think it's a buying opportunity versus gold, which is already seeing that move up due to inflation.
No, with respect to the stock market, we're seeing a lot of people saying that this could be the crash that a lot of people have been waiting for. It does seem like it's pretty weak since the beginning of the year. So can we get an update on the stock market?
Yeah, absolutely. So I'm in the camp, again, when people call for crashes, it's such a tricky thing, right? Because crashes are mainly massive downs in a single day or maybe in a few days. I'm not necessarily seeing that at this point on the market, right? So remember that when you're coming off of all-time highs and just continual all-time highs like we've seen, there's always going to be buyers that are saying, okay, well, last year when it dipped 3%, it was a buy the dip. Here we are down 6%, so it's really got to be a great buying opportunity. And that gives the market a general bid every so often when it dips. Having said that, do I think it's going to meander down? Yes, I do. Again, what you could see here is looking at the longer term chart. This is your long-term uptrend, right? This was your uptrend on steroids, meaning that this is where the Fed came out with ridiculous fiscal stimulus. The government came out with fiscal stimulus, and it caused the market to go in this almost vertical type move. We've now seen the Fed back off and start to take that away. So it only makes sense that the market's going to come back below this upward kind of channel. And in my opinion, you're going to start heading back towards this channel. All right. Now, again, what's pretty remarkable about that is, if you're talking about, we were at about $480 on the spiders up here. If you come down, let's say to the midpoint here at 350 or 360, that is a massive drop in the stock market. I just don't see it as a crash, right? It's more like my guess is over the next 6 to 8 months, we might see it happen maybe by year end. But again, I wouldn't call it a crash scenario.
So kind of a slow move down, but as you're mentioning, still a massive move there. Now, when it comes to geopolitical uncertainty right now, it seems like it's almost as if Russia is about to invade Ukraine. It could happen any day now. How might this rattle the markets?
Yeah, so there's definitely, history at least shows us that these invasions short term do have an impact. So, for instance, all along, last Friday it was like imminent, right? That's what everyone thought. It was Friday afternoon. I called BS on it because it was just too weird that on a Friday afternoon that news would come out. And I've been saying for the longest time that if Russia's going to invade Ukraine, they're not going to do it during the Olympics. China is very proper in that way, and Russia and China have a very good relationship. So it's more likely it'll happen right at the end or after the Olympics. So we are coming into that, post-Olympic period. I think this weekend the Olympics end. So there is a chance that it does happen. I'm still struggling with the positives for Putin. I mean, there's a lot of new sanctions that can come on. Potentially pushing Europe away from needing gas. Maybe they'll find other methods. And Russia relies on a lot of buying of gas and oil from the rest of the world. So again, I'm not sure if it's to me, it doesn't make a whole lot of sense. Doesn't mean Putin won't do it, right? We know that. But for me, I'm in a position where if we saw, let's say Monday, the markets are closed, but Tuesday, if the markets gap down because there was a big invasion, I would be a buyer for a quick bounce. And again, historically, you see panic initially, and then people are like, okay, well, the U.S. is insulated. The consumer in the U.S. is still spending, so it's not the end of the world for the U.S. And so I will make a list over the weekend of stocks that if they do gap down, I'll be looking to buy at least for a swing trade. Again, I still think overall markets will head lower over the next 8 months. So I'm not a long-term investor, but for a bounce off of panic like that, absolutely.
Are there any stocks that you're looking at right now that you still are bullish on, even though you're looking for a pullback in the general stock market?
Yeah, so on a short-term basis, yes. So I'll just throw this one out here, like Robinhood, right? I mean, I'm not a huge fan of Robinhood, but I can't deny that this is a bull flag, so on a shorter term basis, this pattern is bullish. So you might get a pop back to like 15 or 17 bucks on this, as long as it doesn't take out this low of around $10. So, there's little shorter term patterns. There are other areas where I'm invested where I plan to hold for, let's say, 6 or 12 months. And those would be in the names like, the outside the United States names. So like China's Alibaba, Baidu. I mean, today the U.S. stock market's getting pounded, and Baidu's having a great day. It's up on the day about 1%, not a huge day, but still, you can see while the U.S. markets are declining, you're starting to get this potential cup formation, right? So maybe we start to put in a cup and handle pattern here. Looking at the larger time frame here, also, you can see that it's all the way down on Baidu from, Baidu was a $350 stock. It's now at $170. So a lot of these names are very good quality, good earnings quality. Alibaba, for instance, trading at like a 15 forward PE. Look at that drop already. So these are the names that I'm looking at. And one of the things I've taken note of is that institutional investors are very underweight global equities, right? All the money from the world has been focused on U.S. names because the Fed was so lenient and always bailing out the money. So all the money came in from all over the world. Well, now the Fed's not so friendly, right? They're starting to say, okay, we got to fight inflation, higher rates, lower balance sheet, et cetera. So you have to start saying, okay, if they're underweight, they at least need to get back to equal weight with global equities, and that alone can push up a lot of these stocks. Now, as I always say, China has risk, right? We know the potential restrictions and stuff. So you have to invest wisely with percentages of your portfolio. But I do think that's the place. I mean, this is the place where I'm in. I have this stock, I have Baidu, I have Tencent, TME, different ones like that, which I'm absolutely holding for a longer period.
When it comes to the inflation that we're seeing right now, it's interesting to me that the US dollar is actually holding up pretty well. It's actually been going up if you look at a longer term chart. So your perspective on the US dollar and why it's not being taken down as we're seeing, record high inflation.
Yeah. So a couple reasons for that. Number one, the Fed, as they tighten, it tends to make people have more confidence in the dollar, right? So even though we have high inflation, the Fed's now saying, okay, well, we're going to tackle this inflation and fight it. And that makes confidence rise, which generally will mean dollars will flow into, or money will flow into the US dollar. The other side of it is also the fear side, right? So when you have instability on a global basis, people go to gold and they also go to the old trusty dollar. So that also is helpful in terms of getting money into the dollar and propping it up. Now, if you ask me where the dollar is 10 years from now or even 5 years, I think it's way, way lower. I think that inevitably the Fed will get caught in this scenario of, okay, well, we've tackled inflation. It's come down, but maybe not 2%. But now unemployment is soaring. So now we have to print more money, and then inflation's going to soar. So they have to attack that. But they never get back to that kind of break even point. It's always more, more, more. And therefore, longer term, you have to think the dollar's in trouble. So again, would I invest, in that very short term basis on shorting dollar? No, not really, because you have to think that if Russia invades, Monday week or Tuesday we come in and the dollar could be up substantially. But if you ask me where it is 10 years from now, yeah, dollar should be a lot weaker.
No, the interesting thing is the US dollar index is kind of based on other currencies, right? So if the dollar is going to be weaker, it means that it'll actually fall relative to other currencies, you're thinking?
Yeah, I do think that. So I think that the Fed is now, we've kind of made our bed in terms of the Federal Reserve, in terms of their replication of the issues and then fixing the issue by causing another issue and so forth. And I do think that the end game is, especially with the U.S. debt, is that the only way to really tackle it is to devalue the currency and to print more and more money. So, if you look at Europe, if you look at other countries, yes, they're going to be on that path. But I think the U.S. at this point is going to see more and more kind of a movement away from the dollar, even as a reserve currency. I'm worried that you're now seeing the digital Yuan being launched. I think China really has this global plan of that being the future of the reserve currency. So they're going to try to supplant the US dollar, which if that starts to happen, then you have all these countries starting to dump dollars on the open market, which will also drive the value of the dollar down. So, I mean, the main reason the dollar stays as strong as it is because it's the reserve currency. Start keeping a very close eye over the next couple of years if that starts to weaken. If other countries like China start to push the digital yuan to be that reserve currency, then the dollar is in a lot of trouble. And by the way, that's really good for gold in terms of US dollars, right?
Definitely. And one of the big questions is, well, will gold rise against other assets? Because if the dollar is falling and gold is rising, it doesn't mean a lot, but it matters if gold's value is actually increasing. Is that what you're seeing, even if we do see the dollar fall?
I think overall, at least for the next few years, probably next 2 to 4 years, gold is going to play catch up. You could argue that gold, considering the amount of money that's been printed globally and domestically, gold has really lagged in terms of its price, right? So, we've seen real estate go nuts. I argue that we're in a bubble in real estate right now. Stock prices with crypto prices have been in a bubble. We're starting to see that deflate. And I think a lot of that money is going to start to rotate into things that have lagged, which one of them is gold. And other metals as well, even silver to some extent, which, yes, short term, like I mentioned, silver might have a little bit of downside, but I think a lot of upside in silver as well and metals overall.
All right. Well, Gareth, we really appreciate your time today. Before we let you go, did you want to share with the viewers where they can find you and any last thoughts you had?
Yeah. So my last thoughts would be this, is that, everyone wants to know about Bitcoin and why it kind of is declining or has declined so much, even with gold starting to break out. I would just mention that in the short term, Bitcoin is treated like a tech stock, because anytime you have 80% declines from peak to trough during bear markets on any asset, it's going to be treated as a risk asset. If you ask me where 5 or 10 years from now Bitcoin is, I think it trades a lot closer to how gold will trade. It just has to mature into that. So again, I think longer term Bitcoin, golden opportunity there, but I think it goes lower first with the overall market, with de-risking, with deleveraging in the system. And I think gold is the safest place, maybe not the best return, but the safest place to be during this next patch. And to find me, folks, Twitter is the best place, at Gareth Soloway. And if you want to find out more like specific trades I'm taking, inthemoneystocks.com for stock trades and verifiedinvestingcrypto.com for crypto trades.
Once again, Gareth, thank you so much for your time and God bless.
Thank you so much. Have a wonderful day.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.